Hi, I'm Jason Sullivan of Rathbone Group, and in this on subrogation video, we're going to discuss personal vehicle sharing. You're probably familiar with things like Uber and Lyft that match people who are driving vehicles with people who need a ride somewhere. Personal vehicle sharing is similar to that, except it allows an individual to make use of their vehicle and allow other individuals to rent that vehicle when they're not using it. Think about an Airbnb for motor vehicles. In the traditional rental car area, think of Avis or Hertz. They own large fleets of vehicles and have those at locations where they think people are going to need to rent vehicles. Personal vehicle sharing allows one individual to put their vehicle out for other individuals to rent. So it's person to person. For me, let's say I drive to work every day and it takes me about a half hour each way to get from my home to the office and then back again at the end of the day. If I'm not driving during that 1 hour, half hour there, half hour back, my vehicle's just sitting idle for 23 hours. Personal vehicle sharing provides an efficiency in that I could allow other people to use my vehicle for a fee during that time when I'm not otherwise using the vehicle. There's a lot of economic and environmental reasons that people like this idea. However, for subrogation, it does present some issues. Let's say you have an insured and they're in a collision where someone else hits them. You're investigating the claim and you find out that the person who was driving did not own the vehicle. Rather, there was an owner and that owner wasn't in the vehicle. They had put that vehicle up for rent on the ride share platform, and then that driver had rented it and got into the collision. So who are you going to pursue and where's going to be your avenue of recovery? First, let's look at the driver. The driver may have their own personal auto insurance. Usually, if a person has personal auto, that auto will cover any vehicle that they own while they're driving, as well as any replacement or rental vehicle. If you get into an accident while renting, your insurance company is usually going to have coverage for that loss. However, if you're in a location where a lot of people don't own cars, and so they're using this personal vehicle ride sharing for just those rare occasions where they need a vehicle to run an errand or do some task, that individual may not have personal auto insurance. So you may run out of luck in trying to pursue the driver. You would have to look to their own personal assets. And as we know, it's better to collect from an insurance carrier as opposed to try and get an individual to pay. It's just much easier and much faster. So let's look at the owner. For these personal vehicle sharing programs, most personal auto policies do not cover use of a vehicle when you're renting it out or allowing other people to drive it. So the owner is probably not going to have personal auto coverage that's going to cover this loss. They may have a commercial policy, depending upon how many vehicles they own and how many they use in programs like this, to cover the loss. But if they don't have a commercial policy, the owner is probably not going to have any liability either, or coverage for any liability they may have. It'd also probably be difficult to prove that there is a negligent entrustment case because the owner doesn't usually have contact with the driver that rents the vehicle. Everything's done over the rideshare platform. So now let's look at the rideshare platform. Is there an ability to recover from that? States have addressed this issue because as these personal vehicle sharing platforms have become more prevalent, they want to make sure that the citizens are covered, and if there are any injuries or damages to property, that there's some responsibility. As I just explained, the driver may not have any ability to pay, and the owner may not have any insurance coverage. So states have turned to the rideshare platforms, or the personal vehicle sharing platforms, to require them to have coverage. California was one of the first states to enact statutes on this issue, and in 2011, they set forth what is a personal vehicle sharing program with the definitions of what's included, as well as the obligations and responsibilities. And under that statute, personal vehicle sharing platforms, like Turo, are required to provide liability coverage 3 times the state minimum limit. There are other states that have enacted similar laws, Colorado being one that requires the personal vehicle sharing platform to provide liability coverage for up to 2 times the state minimum limit. A lot of other states have adopted what is the National Council of Insurance legislation. This group puts together model legislation that's in the interest of the industry as well as the general public. A lot of states have begun to adopt this. It sets forth what is a personal vehicle sharing program, and the model language does not have a requirement that the personal vehicle sharing platform provide more than the state minimum. It has to provide the state minimum liability coverage, but it does not have to provide the increased amounts that are required in states like California and Colorado. So if you do have a subrogation claim where you are pursuing someone who is driving a vehicle that they obtained through a personal vehicle sharing platform, you do want to look to see whether the driver has coverage or the owner has coverage, but ultimately where the road is probably going to lead you is to seek out that personal vehicle sharing platform, put in a claim through them, and then have your subrogation claim paid up to whatever limits they have under that applicable policy. For On Subrogation, I'm Jason Sullivan, and that's the long and short of it.